What is going on, investors? Hopefully guys are doing well out there. Time to wrap up earnings season like we always do with Adobe stock. They reported their Q4 earnings after the bell. We'll get into them. We'll take a look at the revenues, the profits, the all-important, a little bit of news coming out of Adobe. Obviously, they plan takeover of Figma for over $20 billion. That's obviously going to get the attention of the regulators in Washington. We'll talk about that. We got guidance. We also got some price increases. Those were passed down shortly after last earnings, but we got full year 2023 guidance. We also got quarterly guidance as well for the upcoming first quarter for Adobe. We'll compare those to what Wall Street was expecting, both on the quarterly and the yearly side. We'll get into the revenues. Typically, when we look at this company, it's fantastic. And then we'll come over here and look at this from a technical perspective. In the after hours, after reporting the earnings, I'm seeing this one up about 5.5%. That's being down about 3.33% during the regular trade. Seeing about a 2-point swing over the last 24 hours. We'll talk about this from a technical perspective. Can you dollar cost average? Can you start a position? Or maybe you might even want to sell Adobe. We'll talk about that from a technical perspective. Let's kick things off, though. Over the last year, down 46% year to date. Basically the same story, down about 42%. That's on the heels of those Q4 earnings, which came in at $4.53 billion. That was 10% growth year over year, and it was basically exactly what Wall Street was expecting. We'll get into more of the guidance and these revenues here in a second, but I do want to catch up on a little bit of news. Obviously, a little bit. You've got Adobe agreeing to purchase Figma. This was back on the last earnings call back in September for $20 billion in cash. When we go through this company, we're going to kind of think about where are they going to raise this money. It's obviously going to be obvious when we look at their balance sheet. They don't have anywhere near $20 billion in cash. They don't even have $20 billion in assets. So we'll talk about that. But obviously, the Wall Street is going to be hanging on the decisions in Washington as they're going to be pumping the brakes on this one. The DOJ requesting a second request on this one, which is pretty much standard with these types of mega cap companies. And so we'll see how this one moves through the process. If it goes like any of the acquisitions we've seen over at Meta or Microsoft, this thing's going to string out for a long period of time. Now, Adobe joined other tech firms earlier this year by cutting about 100 jobs. This would seem like a token amount of layoffs. My guess is what some companies are doing is they're laying off some workers almost as a threat, almost to show the employees that they're going to have there left, like, hey, we're willing to fire some of you, so you maybe need to pick up the slack, maybe start working a little bit harder. Now, right after their earnings and announcing a $20 billion acquisition, I immediately got an email from Adobe announcing a $2 to $3 per month billing price increase across most of the plans, my plan included. Now, obviously, most people, when we get over here to these earnings, did not cancel their subscription, and so I think churn remained relatively low. Now, the all-important guidance came in for Adobe for 2023. That's the upcoming year. Obviously, they're expecting revenues to come in right about $19.1 to $19.3 billion. Wall Street was expecting a number a little fractionally higher, up to about $19.4 billion. Now, what these revenue estimates don't necessarily factor in, number one, it doesn't factor in that $20 billion Figma acquisition going through. It also factors in about a 4% currency headwind. And so when you look at these analyst estimates, it could be maybe plus or minus some of these, but that's relatively in line with what Wall Street was expecting on that revenue side. That would represent about 10% growth for Adobe year over year. On the EPS side, expecting about $15.15 up to about $15.45 on those earnings. That is where you're seeing some positive outlook from the company, as Wall Street was expecting a number basically in the midpoint, though, at about $15.35. So it looks like revenue coming in relatively strong for the full year, but also those earnings also coming in strong as well. In terms of the fiscal fourth quarter, that's the upcoming quarter, you're expecting revenues between 4.6 up to about $4.64 billion. Wall Street hit Wall Street right on the nose, right at about $4.64 billion. When you have recurring billing like this company does, and some of the other companies that we look at, even like a Microsoft, it's pretty standard to be able to very accurately predict their revenue. That would represent about 8.75% growth. On the EPS side, again, this is for the first quarter, upcoming quarter, $3.65 up to about $3.70. Wall Street was expecting a number basically right there, right about $3.64. So the company is just hitting everything right on the mark. 8 to 10% growth, both on that earning and that revenue side. Now let's come over here to these financials. You get a little bit deeper understanding into what this company has going on. $4.525 billion worth of revenue. Again, that was about 10% growth year over year, and that did meet expectations from Wall Street. Last year, you were at a revenue number closer to $4.1 billion. Now, the reason why we love this company, a lot of investors do, is the fact that your total cost of revenue on $4.5 billion worth of revenue was just $568 million. That left you with gross profit of $3.9 billion, nearly $4 billion worth of gross profit. That's a little over $300 million higher than it was a year ago when it was at $3.6 billion. When you look at the full year numbers, it just paints a very similar story. Again, on a company that doesn't really have a seasonal product, it's something that creators like myself need month after month, year after year. You're constantly renewing your subscription to this. So you just see steady growth year over year, both on the revenue side, the gross profit side. Now, what you want to see is this company be able to control these operating expenses. And for the most part, that's what we saw over at this company. Total operating expenses in the most recent quarter went from $2.1 billion up to $2.45 million. So about $350 million worth of added cost. You had a shade over $400 million worth of added revenue. You had about $60 million worth of total cost of those revenues. Operating income basically flat. $1.5 billion last year, $1.5 billion this year. You annualize this number out and you get to a number close to $6 billion. When I say annualize, we are taking a quarterly number and we're basically timesing it by 4, and that's what we get for the yearly numbers over here on the third column. You get about a $6 billion annual run rate on that. And again, that's on the operating income side, which is a line that I really focus on when it comes to this company. Sure, you can fall down all the way to net income, you can fall all the way down to EPS, but share buybacks and other types of revenue sources and expenses can alter those types of things. What I like to do is just focus on what the company is doing from an operating perspective. And again, we've got visibility into next year when it comes to the company's revenues for the full year, a shade over $19 billion. So you're going to go from $17.6 billion this year up to about 19. And again, some of that is going to flow all the way down to the operating income side. When you come over here to the balance sheet, it kind of puts that $20 billion Figma acquisition really into perspective, because here's our far left-hand column. This is our most recent read on the company's balance sheet. You had about $4.2 billion worth of straight cash, another $1.8 billion in almost cash or short-term investments. You've got trade receivables, so you got another $2 billion there, and you got some prepaid expenses coming in right about $800 million. That's really not cash. So all things being considered in terms of receivables and cash, you've got a number very close to about $8 billion. So that's a problem when you've got a $20 billion acquisition kind of on hold here. You come down here to total assets. You just see the transformative deal that this will end up being. Total assets at Adobe are $27 billion, and they just agreed to buy a company for $20 billion. And again, they have just $8 billion. So how are they going to raise this money in this high debt market where interest rates are sky high? My guess is they are going to just issue more shares of Adobe. So that is going to weigh on the stock, and that's actually been weighing on the stock, I think, really since this deal has been announced. It's just investors realizing that, hey, when this deal closes, they're going to have to pay out the vast majority of this, or a large portion of the $20 billion, using Adobe stock. They do have some debt on the balance sheet, about $3.6 billion. That's $500 million less than it was a year ago, but most of that just rolled over onto the current side. So they'll probably just reach into their wallet, pull out $500 million and pay that debt over the next 12 months or so. We come down here to cash flows, and it is about as good as you'd expect with the company that is printing this type of net income and this type of revenue sources. $1.1 billion worth of net income. Last year, you were a little bit higher at about 1.2. Flow down all the way into your net cash provided by your operating activities over at Adobe, $2.3 billion worth of positive cash flow, up rather significantly over last year, where you're at about $2.01 billion. Very nice growth on that cash flow side. Not a lot on the investing side. In fact, they pulled back big time there this year. They did buy back about $1.75 billion worth of common stock. My guess is to only issue it maybe 6 to 12 months later for that Figma deal. Now, moving over to the technical segment, obviously this stock down big like most stocks. I mean, this thing has had a big kind of peak to trough kind of move from the peaks back in November to the trough that we made back in October. It made a 60% down move. Now, we've retraced some of it. Now you're basically down about half over the last year or so. But more recently, honestly, the stock has kind of broken out of this downward trend line. We have this orange line representing kind of the downward trend that we've really been in. Really, most stocks in the broader market have been in for a relatively long time. You can move this around depending on how you like to see it, but for the most part, it has broken out on a single candle over the top of that trend line. That can be a bullish sign. On top of that, you're confirming it more recently. You have very steep series of higher lows here. You also have a very large gap created when that deal was announced, that Figma deal. You have a gap here that will close right about $367 per share if the momentum stays in Adobe. And look, in the after hours, it's up 6%, up $20 per share. Nothing to assume that this shorter term momentum, again, longer term or semi-longer term momentum's pretty firmly down across the markets, but very micro trend. This is a very steep uptrend. You'd assume this will continue. You have a very high probability on this stock, I think, going another $20 higher. Retest this 370, 380 level. You'll have filled this gap. That will be where the rubber meets the road with Adobe. Couple of scenarios of people that are watching this video. If you're trying to get out of this stock, you're not a fan of it for some reason, or you just want to raise some cash, I think you do it from now up to about $368 per share. I think you can take profits here, understanding that you can look at the Netflix chart as well. Once it filled the large gap it had after earnings, that stock took a big, gigantic gump. Now, if you're looking to add this stock very shorter term, you could do a shorter term trade, and that'd be the only way I would buy this stock in the shorter term, is some kind of shorter term momentum trade where you do play the momentum where the stock is about right now up to about 368, and I would close a position, do a shorter term thing. There's probably better setups out there in the market. Now, probably the more typical viewer of this channel is looking for a longer term investment in Adobe. I wouldn't necessarily chase this one. Even if it chases up here to 268, should meet some resistance here. We should back test at some point, at least back to this green trend line here. We should have a back test to there, probably south, probably about where the stock is now, if not a little bit lower. More specifically though, probably a more technical setup would be a back test to the orange trend line. That could actually take you south of probably about 340. The longer it goes, actually, the longer this uptrend kind of holds, maybe it trades sideways here, actually, the deeper that pull back to the orange trend line would actually be. That would be the first place where I'd be actually kind of interested in a stock like this. At least, again, from a technical perspective, maybe from a valuation perspective as well. But we have to keep two things in mind. Number one, you have a gigantic acquisition on the table that is going to force Adobe to have to dilute shareholders because they're not going to be able to pull $20 billion out of their pocket. They're going to have to do it with the shares. And on top of that, you obviously have the DOJ and the FTC that is going to challenge this deal and how that plays out for Adobe shareholders, for Adobe's competition going forward as well. That's obviously a story that is going to play out over a longer period of time. But from a financial perspective, from a guidance perspective, it really doesn't get much better than this company. It's always going to be rich from a price to earnings perspective, especially when you compare it to non-software stocks, but about 25 times forward earnings actually doesn't get much cheaper than that in the history of Adobe. Hopefully you guys enjoyed today's video and earnings season in general. Be back again soon with more. Good luck with your investments.